everybody. Let's see how we sit. I think we might want to scooch.
Yeah.
No empty chairs. Simon, come closer.
Oh, yeah.
Good afternoon, everybody. My name is Gabrielle Inzerlo, and I'm a financial regulator here at ADGM. I'm absolutely pleased to be joined with my guest. Hello. I have Adibahama Ludufin, who is, I would say, our local star for today's session. We have Francesco Filia from Fasanara, who is usually based in London, I believe, but comes in and out once a month, correct?
Yes, almost every month.
And our newest, I guess, arrival, newcomer, Simon Kim from Hashed. You may have seen quite a bit of Hashed's activations here at Abu Dhabi Finance Week. You will be setting up a fund soon in ADGM, so we'll be seeing you for much more frequently, but normally you are based in South Korea.
Yeah, so.
Correct.
Yeah.
Well, welcome, gentlemen.
Thank you.
So our panel has an interesting name. So does funding plus frameworks equals opportunity, right? So obviously we have frameworks, we have regulatory frameworks, we have frameworks in terms of how you actually structure out your businesses. But I think today what we really want to talk about is because you are all coming from very different types of financial businesses, we really want to know how are you essentially getting more funding to either SMEs, funding to people, that last mile delivery we were talking about earlier. How are we essentially managing to be good corporate citizens when it comes to liquidity providing to people? Now, I'm going to ask you first if you could please introduce yourselves very briefly. Please.
Please.
Go ahead.
Thank you very much. Lovely to be here on the third edition of the Abu Dhabi Finance Week. I represent Lulu Financial Holdings, which is an investment firm, so predominantly fintechs, cross-border remittance in almost 9 odd countries. We invest into digital banks, we invest into micro-lending platforms. So wide varieties of investment portfolios. We're present in 9 countries, everywhere in GCC, India in the subcontinent, and in Philippines, Singapore, Malaysia, and Hong Kong in the Far East. Now, we started as a cross-border payment provider, predominantly in the GCC, started in 2009, and quickly came to understand that there is a large amount of requirement to the SME and the MSME that we are catering into. If you look at the recent data from the International Finance Corporation, around 62 million SMEs or 40% of the formal channel of SMEs and MSMEs have a funding gap of close to 5 trillion, which is around 1.4% above what is currently being available for them across the globe. Now, this is a very important aspect to look inside because this gets associated with the job creation in each of the markets. Now, as you know, in every economy, one of the largest challenges faced by the government is to create more and more job opportunities for its citizens. And here is where the SME and the MSMEs come into play. Predominantly, why? Because these are the lifeblood of every economy. This is where the action takes place. But unfortunately, this is where the least amount of credit actually goes into. Now, here is where, in the last couple of years, we have seen the fintechs play a very important role bridging the gap of the funding requirements. This is also traditionally done through the partnership with the banks and many other private funding institutions, but predominantly for the banks to even understand its own customers more betterly and more efficiently. This is where the fintechs comes into play. Predominantly, they've been able to grasp in more number of data that is required for a credit approval to take place, use of AI, use of open banking. So if you really take up the report from the UK, you find out that today almost 60% of the entire SME and MSME applications have barely reduced on timings, predominantly because of the adoption of open banking in UK. And this is true to many countries that we have seen that we are operating in, under. Open banking has become a revolutionary thing in most of the countries, and giving access to fintechs to participate on the larger and broader game, along with major financial institutions and also private credit suppliers, have really helped the SMEs to bridge the gap. Is it enough? No. I think so there's a long way for us to go, and I think so that's where people like us and many other institutions come into action.
Thank you. Francesco, please.
So thank you, Gabriele. Thank you, ADGM, for the invite. Fasanara Capital is an asset manager and a technology platform. We are headquartered in London. We manage $5 billion in assets under management, fully dedicated to the digital future of financial services, which to us means really being specialized at lending to SMEs and individuals through a range of fintech platforms globally, and also doing cryptocurrency trading, high frequency market making, etc. So the whole firm is dedicated to digital lending and digital assets. Within digital lending, we operate through fintechs. We are an incubator, accelerator for some of these fintechs. We have more than 140 in 60 countries. We operate also across the GCC region. And what we do is lending to SMEs, but also individuals. And within those two main buckets, you have all sorts of lending under the sun. So from SME loans to supply chain finance, to invoice discounting, to revenue-based finance, point-of-sale financing, buy now, pay later, consumer loans, personal loans, real estate-backed loans, and all the sorts. And we have specialized at developing software and data analytics in order to be able to do our job efficiently. Today, we have been doing it for 13 years. We have cumulatively lent $85 billion to the market over these number of years, and we plan to increase it over time. And primarily, our backing is from institutional investors, insurance company, pension funds, and banks, and growingly more and more banks. As Deep said, banks are a good partner for what we do, despite the fact that we try to push the boundaries of innovation and do it digitally instead of just analogically.
Wonderful, thank you. Simon, please. I know you don't do credit lending, that's for sure. However, please tell us a little bit about Hashed.
Yeah. So, hi everyone. My name is Simon Kim. I'm a co-founder and managing partner, CEO at Hashit. Hashit is one of the largest and active early-stage venture capital for blockchain and Web3 industry in Asian market. So far, we have invested more than 200 innovative blockchain-related tech companies all around the world. And also, we position ourselves not just as a venture capital, but also as a ecosystem builder. So we have some company builders, just as a venture studio, for building some of the infrastructure of the big financial companies. So we made a joint venture with the largest bank in Korea, named KB Bank, for build the Korea's first crypto custodian solution together. So you know that Korea is one of the most active countries for the digital asset and crypto. So nowadays we are covering 95% of the Korean crypto custodian solution, and the asset under custody grew up to 15 billion by 1 year. So it's pretty active. And the other example is we also made a joint venture with the largest bank in Thailand, owned by the Kingdom of Thailand. Actually, the bank truly believed that within 10 years, the traditional bank will be gone away because of the blockchain technology. So the management team of the bank truly wants to rebuild the old infrastructure with the blockchain and Web3 technology. So now we are building the account abstraction wallet for the institution, and also stablecoin infra and membership tokenizing infrastructure within blockchain technology, and also digital ID as well. So now we are building some of the proof of concept in Southeast Asian market as well. So these days, we just opened our new office in Abu Dhabi, and also looking for the collaboration with some of the large financial institutions in this region to collaborate to support blockchain initiative or collaborating. Yeah.
Thank you. So I'm just going to take that last point you mentioned before the bit about the Abu Dhabi office, but how evidently you do support, traditional financial institutions, right, in transforming themselves into more blockchain-led businesses.
Yeah.
Now, I will not go down the route of, bank bashing at all. We don't do that, and I don't think anybody here wants to do it because it's always a partnership. However, we have to admit that, banks are not always able to service everybody that needs it in the time they need it and at the cost that they need it. Therefore, there is definitely a gap, whether in funding, in credit, in all these sorts of lending. who should be playing that, who should be in that gap and plugging that gap? Whether it's for SMEs, whether it's for more evolved firms or startups. Would anyone like to kick it off?
Yeah, so, the primary reason why we are all here is because of the business. It's because of the MSMEs or the SMEs or the individual needs of a consumer to actually initiate a transaction. And I think so, once we have understood that, we have come to understand that we have all have boundaries, whether it is large banks because of the regulations that they go through under, whether it is fintechs because of the lack of availability of credit for them to lend, or whether it is private lenders because they also have their own regulations to follow it up. But once an institution starts keeping customer as its center and starts to build everything around it, I think so a lot of things starts to unpuzzle itself. Whether it is technology for the sake of customer satisfaction, technology for the sake of ease of doing business, technology for the sake of getting economic activity up and running in an economy. I think so everybody has their own parts to play. I think so nobody can take a lead to say that we are the real solution providers in the market. That's not possible. It needs to be a game of partnerships, whether it is through fintechs, they have to partner with the banks, they have to partner with private lenders, technology providers. So it's a consortium of a group of like-minded companies that come from a common cause of understanding the pain point of the consumer or the company and giving them a solution that takes them forward. And that's the way that we at Lulu Financial Holdings see it.
I mean, it's a smart way to look at it. Francesco, I mean, Fasanara has been a pioneer in fintech lending, also liquidity providing when it comes to digital asset space. Can you tell us how you even figured out this gap in the market? And you've been quite successful at it. Tell us a little bit more.
Yeah, absolutely. And tying up in the previous argument on banks, I mean, we focus on lending, right? So lending, you wonder if commercial banks are still the only place or the main place to do it from. Whether they have the right technology, but also whether they have the right funding structure. So it's very clear that the banks are not the best place where to implement financial innovation. For various reasons, they cannot be blamed either, right? They have a lot of regulatory overburden and overdrive, especially after the global financial crisis. They have a strong legacy infrastructure that is difficult to dismantle. It's very tough to build applications on top of it, and you can only be incremental, not revolutionary. So a number of reasons why IT doesn't work, the innovation through IT. But also from the funding structure perspective, banks are funded through short-dated liabilities, right? They are depositors funding the banks for the most part, most of the banks. And we have seen the shortcomings of that with the Silicon Valley Bank, with Credit Suisse. We have seen the risks of bank runs. Within the digital economy, bank runs, they become flash bank runs, or the risk of. And so all reasons why perhaps lending should happen also somewhere else in cooperation with the banks as a source of origination and client services and franchise.
So would you say that it makes more sense to, instead of having, I guess, institutions with large balance sheets where you could potentially have maybe a slightly bigger risk of contagion, it's better to have smaller firms that are actually lending out to this ecosystem?
No, I think small at the beginning and then growing over time and perhaps accelerating that growth at the very end. So I think that the scale matters also for fintechs. Nowadays, we are early stages still in the business, and as Adip said, there are constraints in funding requirements. But what Fasanara exists for is to provide capital to these fintechs at a time in which they cannot find capital. So we are an incubator, early stage. We provide them with credit facilities of all sorts across their asset classes, only after they integrate in us through technology and API. But I think that scale really helps also in the fintech space, and the scale also through banks. I mean, banks have been very recently, in recent years, involved with the originate to distribute model. They've handed over some parts of their balance sheets to the larger credit managers like Apollo, KKR, and some bits through partnerships with the fintech lenders, where they utilize fintech lenders for the technology, the last mile, but they still operate as the source of clients and franchise and origination of lead generation of clients.
I'd just like to make a point here. In continuation to the conversation that we're having here, our regulator here in UAE, the central bank, clearly understood that there is a gap of larger banks not able to address the smaller segment of people. Here's where they came out with the new regulations of creating community banks. Now, the community bank regulations is purely on figuring it out on a dirham-based, local currency-based lending without international exposure, finding out to the root of the community, on going out to the smaller mom-and-pop shop setups, understanding their needs, whether it's through POS financing, whether it is for supply chain financing, and then, able to give them that credit. I think so that is a commendable job that the Central Bank of UAE has really come out, understood the gap in the market, and came out with a regulation of creating a smaller format of a bank that would service the smaller community. And I think so it's been a successful 3 years of journey for them.
So I think that's a phenomenal point. I'm going to use this to bounce back to Simon, because obviously we're seeing two different scales. On one hand, we see that sometimes for some communities, you need to go simple. You need to go small, you need to go simple, you need to go straight to the source. But then, for instance, Simon, you were just telling us about how you are now being, a pioneer in the Web3 and the blockchain space. You're being approached by large financial institutions, by big banks that are asking you to help them digitally transform, right?
Yeah.
How do you see that affecting their end customer as they become, blockchain-based businesses? Do you see that being better for the customers, being easier to adopt?
Oh yeah. So one of the best use cases of the blockchain technology is, I'd rather say, it's a stablecoin. So yeah, so stablecoin is already very powerful. So already more than 200 billion of stablecoin issued on top of public blockchain network, and many people haven't recognized it yet, but the trading volume of the stablecoin surpassed Visa's trading volume second quarter this year. So it's already happening, very popular on on-chain finance, and also it's penetrating to the traditional finance as well. So some of our portfolios are innovating the remittance or payment using stablecoin infrastructure to cutting the fee or combining with the smart contract to make a more efficient and more transparent service. So this is really happening. And the other part is, actually in the blockchain ecosystem, the credit is not that popular yet. So for the lending side, the collateral lending is more matured. So it's easier to get the collateral from the BTC and Ethereum, some of the large cap coin. It's using the smart contract, it's very easier to make a direct lending service to the end users. But for the credit side, it's a challenging because there are not that many credit data on blockchain yet. So the challenging for the next era should be how we can bring all the off-chain credit data, some of the financial data, or some of the private information of the people to the blockchain, and combining it, we can develop more credit lending side. One of the examples from our portfolio is GrabJoop. GrabJoop is the joint venture from the Grab in Indonesia, and the other counterparty is Hanwha Life Insurance, one of the biggest life insurance company in South Korea. So the joint venture wanted to make a credit loan to the gig workers in Indonesia. So gig economy is very popular in Southeast Asian market, but the problem is most of the gig workers in Southeast Asia want to get the salary at the front of the month.
Yes.
But there are not that many credit. But Grab itself, there are lots of data from the gig worker, so they can make a credit loan to the worker and cutting the 3% for each month. So combining it, it's a 40% of the credit pool. But the problem is there are not that many supply for the loan in Southeast Asian market. So stablecoin can solve this issue because the lending rate between the Southeast Asia and some of the developed countries is a huge gap. So in Japan, the lending rate is only 1%. And for the Southeast Asian market, the lending rate is up to 30 to 40% by some people. But using the stablecoin, it's a very easily sending the lending pool to the Southeast Asian market with a very efficient way. So blockchain infrastructure and stablecoin is filling the gap just like this. Yeah.
All this helps essentially to what you were saying about last mile delivery.
Yes, so I was just wanted to add, while that was more on a macro level, we are also piloting something very similar in India through our Lulu FinServe, where we're trying to wrap up the CBDC and then convert that into the lending platform on the commercial side, which is on the micro level lending as such, And we're also trying to see using of blockchain for the use of doing early wage access as well, So it's a wonderful way of getting things done to the smaller segment of the economy. Yes.
Francesco, now obviously you are lending to much more sophisticated and technologically savvy firms generally, or you're utilizing fintech firms themselves who are very aware of their clientele. Are you seeing actually any demand for stable coins or fiat reference tokens or anything at all with your firm?
So it's very funny that very often the fintech world, meaning operating through hard currencies, and the crypto world or the digital assets world, they don't have as much interactions as I would have expected when we started this business. Like they are typically working on a dual track, either one or the other. However, there is more and more platforms doing fintech that they are looking at, functionalities on chain, off chain, and I think this is only going to rise over the future. One of the main area of interest, given the fact that we are active on both in fintech lending through this range of fintechs lending to the real economy, and in the digital assets through our digital assets market making expertise, which is also very old, 7 years old, which by industry standards is veteran status. And I think that one of the bridges which is the most easy to see and detect is the tokenization of real world assets.
Well.
And,
I think that's been the topic all week. I think I've heard, it's definitely on everybody's mind at this point. That's right up your street as well. No, please, sorry, Francesco, carry on.
No, this is it. No, this is it. So I think that this is the bridge where you can have a lot of asset pools in the real economy, tokenized, so brought on chain for additional liquidity, transparency, and efficiency.
But is it also as a means of collateralizing?
Yes.
So if you are, in that case, and you have more collateralized loans, you're able to maybe lend even more, and it gives more security and such. Do you see this ever happening for smaller segments?
Well, we see it happen
on... but different types of segments, as to say.
I mean, scaringly, yes, and it is also a wonderful element. Why? Because scaringly, because it's the cross-border space, which was a traditional way of moving money, has suddenly started utilizing stablecoin as its primary use, which is the USD and USDT, as also a medium of moving money from one country to another country. Wonderful. Why? Because it opens up so much possibility on what you can build on top of that one. So I think so. For us, the wave that is hitting us in the last 12 to 24 months is actually forcing us to rethink the traditional rails that we have already put inside, and now we're trying to break it up and put up all these new rails that is going to open up so much new possibilities.
Well, new possibilities is better for consumers ultimately.
Absolutely.
We are running out of time, so I will take advantage of this moment to essentially close us off.
Thank you.
Gentlemen, thank you so much for your time. The lesson we've learned today is that there is a financial player for everyone.
Yes.
You just have to find them, and that the future is tokenized, I guess.
Thank you.
Yes?
Thank you.
Thank you so much, everybody.
Thank you very much. Thank you.